Hi everyone, welcome to this month's Financial Markets Update. I'm Piers, Bolger, Chief Investment Officer for Viridian Financial Group. Well, May has been a very interesting time in regards to financial markets. The three challenges that we're seeing at the moment relate to the ongoing US-China trade dispute, what's happening at the Fed and how they'll react to that trade dispute if it continues to worsen, and then on the domestic front, the recent move by the RBA to cut rates to an all-time low of 1.25%. How we've been translating those thoughts into our portfolios. If we look at the relationship between the US and China, clearly in our view that's not showing any signs of improvement. And from a trade perspective, we think it clearly has some serious implications as we move forward in terms of corporate earnings and overall growth from a global perspective. At this stage, as I said, with two countries representing 40% of global GDP, we think the slowdown will flow through into what we're seeing in regards to Fed commentary. The Fed has clearly made recent moves, and in our view it's likely that we'll see a Fed rate cut through the second half of this year, possibly even two. Quite a different scenario from 12 months ago when the Fed was saying that the neutral rate was a lot higher than where it is today. Equally, we've seen the Reserve Bank of Australia cut rates by 0.25% to 1.25%. We think they won't stop at 1. We think that ultimately we'll see another 25 basis points cut in the next couple of months, potentially as early as July. What does all this mean for financial markets and portfolio positioning? Well, when we think about that in the context of our portfolios, we've certainly been reducing our cash allocation. We don't see a lot of value in cash at the moment, and we've been adding to our fixed income positioning. That's worked reasonably well, albeit the bond yields have clearly fallen to all-time low levels. But equally, we've been adding selectively to our equity positions because we feel that in a low rate environment, discount rates are clearly lower, that there is some ability and still some earnings growth coming out of the equity market. So we've been, as I said, selectively adding to our equity positions. But overall, from our perspective, we've been focusing on really trying to deliver a more balanced, more neutral investment portfolio in order to not only cover for the shocks that we've seen in financial markets over the last couple of months, but equally to be able to balance out those investment returns which we think are potentially coming through over the next little while. As always, it's really important that if you have concerns about your portfolio or just wish to discuss your individual strategy, please feel free to speak to one of our advisors. Thanks as always, and look forward to catching up with you next month. Bye for now.